has secured felony guilty pleas from the world's largest cryptocurrency exchange, Binance.
Actually, it's Binance.
Binance.
Binance. Largest virtual.
Binance.
Binance. And let me be clear. It's Binance.
Binance.
Binance. Council has discussed crypto regulations and legislations at length, and we have come to the conclusion that instead of regulating, we are going to ape a fat bag each into laptop and pump it to over $1,300,000,000,000,000,000,000 market cap. Let's fucking go, crackheads.
Good morning, everyone, and welcome back to another episode of the Crypto Morning Coffee. I got my coffee locked and loaded, ready to go, because we have to talk about Bitcoin. Bitcoin is down another 5% roughly on the daily candle, so doesn't feel great, but to be honest, did it really change anything here? Not really, right? Because since the 7th of February, we are lingering at the same support and we have not put in any other lows. So it just feels bad because we had been bouncing back and we had been going up to 70,000. Now we're back at 65,000, but I think everyone who believes that Bitcoin is going to be the future should be happy about a 5% discount within this weekend plus today, and we don't know how it will turn out. This could definitely collapse down. I mean, this support is nothing super big, and in my opinion, we are within the buy zone to add more Bitcoin to our stack if we believe in Bitcoin. Now, not everyone does, and as uncertainty increases, absolutely understandable that not everyone wants to be in a risk asset at these times. Interestingly, already talking about some levels, right? We had one rally so far back to the bull market support band and turned it into resistance up here. There could be another rally coming up. That is to be discussed, right? At some point, though, there will be a counter trend rally out of this. And as this bull market support band is coming down, it's unclear exactly where this is. But there is one target that could be hinting at that, and that is CME gap. Okay, so here we see it. The one open CME gap that we have so far is sitting at around roughly 80 to 81,000 in my opinion, and there could be absolutely a counter trend rally going all the way up here, put in a lower high, and then maybe even a new low then towards May or wherever this is. As the bull market support band is coming down, this would look like a hit, right? Something like that could be happening. We've seen that the majority of CME gaps gets closed at some point, and even fully closed, which is why I do expect this rally then, depending on when it happens, to go at least to this level of 81,000. So that to keep in mind. Let's look at the world situation a little bit. We do see that stock futures fall because of new Trump tariffs, and we also do that Bitcoin makes the headlines on CNBC today. Bitcoin falls over 3%, now it's 5%, right? As Trump tariffs raise uncertainty. Then also here, right, is the magnificent trade over? We are going to discuss that as well in a bit. And 5 big things we are watching in the market this week. Let's see what is going on there. By the way, guys, if you enjoy some news analysis and so on, everything around crypto. I know it's a bear market. I know we are only a few people, but if you enjoy this, then please smash up the like button. Let's get this with everyone who's watching also later. Let's get to 30 likes on this live stream if we can. We're going to try that until we hit it, and then we go higher from there. But 30 likes on the live stream would be great. So we see basically only numbers here, right, in these articles. I don't think that these articles really add much. The drop came as Asian equities rose in early trade. Doesn't really matter. What really matters is that we have some developments in the world that fuel uncertainty, and one of this is this one here. 40 to 50% of the deployable US air power in the world has been moved. Think air power on the order of 1991 and 2003 Iraq War and growing. Never has the US deployed this much force against a potential enemy and not launched strikes. US military deployment in Middle East in anticipation of possible military operation against Iran, right? We do see it here. Approximately 160 flights of these C-17A, whatever, right? Also going on since January already. 18 flights to Kingdom, Saudi Arabia, Qatar, Djibouti, and so on. We do see F-35s. We do see whatever, right? Whatever the military has. And here we do see what is being moved on the map. I'm not a military strategist or anything, but I'd say if people like Mr. Pape here, who are references in that, say that that is a substantial move, we could anticipate that at least some operations are going to happen in that area, like we saw it with Venezuela, right? So forget about only pizza indexes or stuff like that around the Pentagon, which is also important, but look at also actual military equipment being moved. And I think we will see something there in short, regard also on CNBC. But I think now the main story in the market is that Trump's latest tariffs. I mean, the tariffs have smacked down by Supreme Court. Now he's just going another route to increase tariffs from 10 to 15% globally. And we will see how this turns out, right? He says, also you see it here, effective immediately, right? So I think the markets will absolutely not like that, because that is basically a worse situation than before. Yeah, but let's look at a little bit at the what's going on here, right? So what we do see is, here we see the Bitcoin closing candles, right? If Bitcoin were to close the February without a counter trend rally in, in 5 days, because it's shorter month, we would have 5 consecutive months in the red. And that has happened before, don't get me wrong, but it is 7 years ago. So that was in 2018 bear market, and it started in August and lasted until 2019 beginning, and there it was 6 months, right? So until we reach the 6 months, this is not an out of the ordinary. And also we have to see that the drawdowns per month are fairly shallow compared to what we've seen then, right? Here we have 3%, 17%, another almost 3%, 10, and now 14%. So this is actually the second worst month. But we see people on Twitter and everywhere screaming that this is something out of the ordinary. It's not. In 2018, we saw -9, 5, almost 4%, then 36% drawdown, followed by 5%, and then another 8.5% drawdown. And then we went into a bull move, followed by another bearish phase, right? That was this apathy phase before the actual bull in that phase, right? So Nothing out of the ordinary. Yet the fear and greed index is back to 5, which is basically multi-year lows. And I think the reason for this is, and I mean, we can look at this. This is super important, right? To really check this back, right? We do have this massive fall. Yes, we see all these red candles. Yes, no real month-long counter trend rally. We have been falling 51% at the maximum, but look at this. If we look at the last bull market, we have dropped 55% more than here in the last bull. During a bull, we have then afterwards put in a new high, right? So it's not like this is the worst bear market crash ever. The bear market crash, last bear market, and you were all here with me because, I mean, every one of you, at least that I see in the chat, was here already when this bear market happened. That was a 77.5% drawdown, okay? So that would be, if we would just go with the same type of drawdown, that would be as if we were going to 28,500. That's how bad the last bear market was. That's as if we were going to go to 28,500 from here. Yet the fear and greed index is at the same level as when we collapsed down to this, right? So we are way above this level. In fact, we are at 65,300, which is basically where we were after the halving and after the ETF rally. Remember when we had this bear flag here and everyone talked about the triple top? We are only back to this bear flag, and I think this is massive. If you would extend this is massive noisy area. Look at this. If we are extending this zone, right, then we see that we have been very long time in this zone. We have been a very long time in this zone. In fact, we have been here for 4 months, and then here we spent another 3 months in this zone, so that makes it 7 months, and then here we spent another 8 months in this zone, so in total 15 months. 15 months, that's 1.25 years, and now we are just spending another month, which just makes it a little bit more than that in this zone, and potentially we are going to form our bear market bottom in this zone. Maybe we are going to crash down and hit these lows here, right? But I think this is the buy zone because we don't know exactly where it is. Interestingly, and now going back to the fear and greed stuff, 5 has been traditionally an absolute buying opportunity, right? And here we are seeing all the fear and greed balances, right? And you see that in crypto fear and greed goes from fear to greed and back in a very short time. And there are a lot of times where we spend more time than just 1 or 2 days. Like these 1 or 2 days are collapses in the market that quickly recover, right? But these clumps, they are real fears, right? So we had COVID and FTX on these levels where we are below 10 and we built a cluster, right? So then look at today. We are starting to build a cluster here and we are below 10. Here's the 10 line, right? Sorry, this is the 10 line. Not 10 lines, right? This is 10. 10 seems to be a number here, right? Also 1010 was when we crashed. We see a lot of clumps here at the COVID and just afterwards massive rise to the bull. We did saw FTX collapse, which we see here happened between May and July. All these clusters were between May and July of 2022, right? So that is actually here. This was when things were falling. So May is this, right? So this until June, July, there you go, right? Until this small relief rally, it wasn't even the absolute bottom. So you could argue that based on that, also our cluster building could mean that this section here is yet to come, right? Which is, by the way, a counter trend rally followed by another drop and multiple tests on the bull market support band from the other side. And then the bear market bottom is in once you're breaching this bull market support band. I would argue that we are going to see just that. We are building this fear cluster. Sorry, I'm moving back there with the image. We're building this fear cluster, and we're going to make something out of it, right? So building the fear cluster here, and then moving back up, right? There will be something that pulls this back up. Also here from FTX, right? We had the counter trend rally. And then when we built out our bottom and we started seeing price stabilize, actually the fear and greed index already moved up, even though that our bottom was only in here, right? So you see this here, right? This is October to December, where the fear and greed index was not great, but way up here. That's where our bottom came in, right? This is December. This is where we had the last red months before a massive 6x rally to the upside. And now we have 1010. 1010 is already 5 months ago. So we are deep in the bear market already. Whereas everyone is saying, this is just the beginning. The crash is coming. And now this time is really different from a narrative perspective. Because last time this bear market was driven by altcoins, right? By altcoins selling off. And the exchanges on altcoin leverage trades imploding. This time there was no altcoin season, so of course the bear market needs to be based solely on a Bitcoin bearish narrative. And this is exactly happening. Look at this. People are realizing, so this is the statement from Nate Gerasi or something like that, right? People are realizing that Bitcoin is what it has always been, which is simply a speculative asset, said Tom S. Sayi, president, founder of Seventh Report, and a former Merrill Lynch trader. So this is how they try to get credit to one specific source. Like in bull markets, they put like multi-trillion asset manager says Bitcoin is going to 500,000. Yeah. So then everyone is like, okay, if this guy absolutely knows what he's talking about, so he must be right. Like just as Tom Lee said that by the end of 2025, Ethereum is going to be, what did he say? Like 20,000, right? Didn't happen. Now it's like 1.6K or so. President and founder of Seventh Report, blah, blah. Okay. Bitcoin is not replacing gold. It's not digital gold. It doesn't do the same thing. It doesn't give people the same utility that gold does. It's not an inflation hedge. There are other better hedges, frankly, where you don't have to worry about volatility, and it's not a chaos hedge either. This is interesting because, first of all, not entirely true. Let's read the statement that is commented by Matt Hogan here. These are terrible takes. Bitcoin is an emerging store of value. And that is true, right? Gold has thousands of years of history, at least 5,000 years of history and adoption, okay? And yet, right, central banks are buying it and it shoots up like massively, but then the 15 years before it basically didn't do anything. You cannot ask it to emerge from nothing as mature gold. Imagine in 2009 as a newborn, it is 100% speculation. Now imagine 2050 or whenever, when every central bank knows it and it's as normal as gold, it's 0% speculation. You cannot travel from 100% speculation to zero speculation without ticking every gradient in between. The reason it doesn't fit any individual box right now is it's in the uncomfortable middle. But that's a necessary part of the journey. Either you believe it's literally impossible to create digital store of value, or you have to imagine it's passing through exactly teenage state. Now, I think this take is still weak, so I want to enhance it a little bit here for us, right? This take of Matt Hogan. And this is, of course, a terrible one, right? Because if we were, let's grab a chart and go to gold. Okay, if we see gold here on the monthly, and we are looking at gold throughout the years, then we do see that gold went in a multi-year bear market from 2011. So Bitcoin's inception is just here, right? Where gold had its last run up. So while during Bitcoin's inception here, 2008 to 9, in this real estate crisis, Bitcoin made 170%, right? And then after that, Bitcoin went into a multi-year bear market for 1,500 days, where it dropped 50% of its value, right? This is funny because the same guy could be gold doesn't work anymore because it dropped 50% here from there. So gold is not a hedge against inflation, okay? Because Bitcoin is also down 50% right now. So where's the fucking difference, right? And then from there, gold over the course of, 3,710 days did a measly 5x, right? Which is still fine, right? If you buy the absolute bottom. And from that top, if you were to say, okay, people bought gold at the top just as they're going to buy it here as well, it did not even a 3x, 170% or so, right? Until now. Of course, there can be more, but this is 15 years, 170%, okay? Whereas Bitcoin is now also down 50%, yes. And from this bear market bottom, just giving it the fair chance again to just these candle closes, it did 600% from within 4 years, right? From the last bear market. Let me just quickly grab another Bitcoin chart that has more history. Bitstamp 1 without lines. There you go. Okay, but wherever point in time we are taking and saying, let's say, for example, inflation has been rising here, and let's just say we didn't buy the COVID dip, but we did buy somewhere in between here or so, right? Then to where I am right now, my Bitcoin is up 625%. Sorry, and let's also take the time here. When this was 2020, right? So let's take the time to where we are with the dip, and we didn't buy there the absolute low because it would be much more percentage return, right? 672% within roughly 2,200 days. So Bitcoin did in 6 years what gold couldn't do within 15 years, right? And now this guy comes out and bullshits me about that Bitcoin is not the hedge against inflation. Bitcoin is right now in a bear market and gold is right now in a bull market. Had I hedged my money, and this is the definition, had I hedged my money here against inflation, I would be better protected than had I hedged my money with gold in that time. That's just the truth, right? I mean, we could also look at it from a standpoint of, I don't know how much chart history there is, but it should be like Bitcoin divided by gold. Where is it? This is unfortunately only a chart from September 24. I don't know how to get. Is there any option to get a longer history for Bitcoin against gold? Because 24 doesn't serve us much. That's only outperforming here in this bull market that we just saw. But I wanted actually a little bit more history there. Okay, not going to pull that, but if you can, just compare it, Bitcoin and gold on the slide, or on TradingView somewhere, and then you will find that Bitcoin massively outperformed gold there. Actually, maybe I can. But let me see if I can see BTC divided by gold, and then I can select which gold. Is that true? Maybe. Oh yeah, maybe that one works. Yeah, that's okay, but that works. I can select it. So bear with me here. BTC, where we take the Bitstamp chart. Fuck. And then divided by gold, where we take this chart. That should work, right? There we go. Now we have now we have this history of BTC divided by gold, which is where we see that right now is the worst performance because gold is pumping so hard, but over time you see that Bitcoin is just massively outperforming gold, right? Or in non-logarithmic terms, performance-wise, we are close to back to 2023 levels, bear market levels right now, as gold is really catching up. But we need to drop to down here to make it even, and we would need to drop down much, much more to really get the outperformance, right? On the logarithmic chart, you see the return scale, and here we really see that, yes, we've stalled, but we are still outperforming, right? And that being that Bitcoin is in a bear market. So I think Bitcoin is a great buy here, and I would even say that how much more can we drop against gold until we would break fundamental levels, or will we even put in Bitcoin against gold lower or an equal low? I don't think so, actually. And that means that this is confirming for me, or chart-wise, I would say good buying opportunity, right? Great buying opportunity. Way worse underperformance of Bitcoin here than during this time. Also, look at the RSI level on this Bitcoin against gold comparison. It's as basically as low as it never been before. So I would say, yeah, that's a massive buying opportunity. And then also, and I think this is what every investor is waiting for right now, is that let's get rid of the lines quickly just here. This is the S&P 500, and the S&P 500 right now seems to be stalling out, right? It seems to be losing steam. Actually, I need the lines then in there. It seems to be losing steam. You see this here, right? How it doesn't, maybe we go one time frame below, how it doesn't go as crazy anymore as before, right? It went up after breaking this overhead resistance, and now it sits support on bull market support band. It reacted there, but this losing steam comes into barely holding on to this upper trend line, and usually what happens once you lose a steam, it comes down, right? It doesn't always come down much, but once it loses this trend line, the next support here would be basically down here, right? So we could see at least a correction of 8% in the S&P 500, which then will probably fuel speculation about more crash to come. And I think that is overdue right now. And I would say Bitcoin is a canary in a coal mine for this to happen, right? For these markets to lose steam and then crash. And this takes time, right? This is not like tomorrow. Losing steam already took time. These are weekly candles, right? So we are coming here from November, losing steam, and now actually it seems that we are curving. And this could look like this, right? You come up again, and you go, and then you crash, right? And depending on how bad the market is in shape, we could crash more. There was a great video by Benjamin Cohen. I don't know if you saw it, but I've no shame in recommending someone else's channel that has way more followers than me. And he did some he basically did a really great analysis of the S&P 500 divided by the unemployment rate, and showing that the unemployment rate always comes down to a certain level, then recession hits, and then the stock market comes down, and he is also talking about hard and soft landings in that. I'm not going to reproduce this because I think it's just great the way he puts it. So you can look at that. I think it's called, the video is called, it's just out from 1 or 2 days ago. The video is called Visualizing the Business Cycle. And I think that's great. And it perfectly aligns with what we're seeing here, that we will, I think, come down here and think like everything around the business cycle gets worse first, to then have the new Fed chair putting in stimulus, putting in lowering rates. I think that's what needs to happen. So watch that's educational pure. And then here we see it visualized a little bit better, right? I mean, BTC has never traded below previous cycle peak for any meaningful time. Meaningful time being like a couple of months, but nothing much more, right? Here we see it also from here, like previous bull market high. The bottom is in this zone, right? This is the box that we are outlining right now. Bitcoin has smashed in that. Probably it's going to be a little bit more in that towards this 60,000-ish and form out the bottom there. I think that's I can only emphasize, I think that is great buying opportunity. Interesting is also we do see some capitulation or / waiting in this uncertainty time. For example, crypto hedge fund cash levels are fairly high, right? I mean, they have been very high already in the beginning of 2025, but now they are really, really back to almost all-time highs. There's only this month here where they were higher. They're now sitting at 15.3% in cash during crash, waiting to deploy capital. Also this year, BitDeer has liquidated their entire BTC bag, which is crazy, right? So if we're looking at this article, by the way, cool feature here from Cointelegraph to write articles in X. So we do see Bitcoin mining firm BitDeer has sold all of its corporate Bitcoin holdings, reducing its treasury balance to zero, according to the company's latest operational update. In its latest weekly report, BitDeer disclosed that its pure holdings, excluding customer deposits, have fallen to 0 Bitcoin. The report shows the company produced 189.8 BTC during the period and sold the full amount, alongside an additional 943 Bitcoin, which was liquidated from its existing treasury reserves. Okay, so this is the post, right? Mining firms commonly sell a portion of production to fund electricity hosting equipment costs, but they also maintain a treasury balance to keep exposure to Bitcoin price appreciation. Fully liquidating reserves is less typical. So Cointelegraph reached out to BitDeer but had not received a response by publication. So what could be happening here is that BitDeer actually is in trouble and had to liquidate to fund their obligations. On Thursday, BitDeer's shares fell sharply after the company announced plans to raise $300 million through a convertible senior note offering, with an option to expand the sale by an additional $45 million. The notes due 2032 can later be converted into company stock, cash, or a mix of both. The company, funded by former Bitmain co-founder Jihan Wu, said the funds will support data center expansion, AI cloud growth, mining hardware development, and general corporate needs. So this seems to be, they liquidated all their Bitcoin to have enough cash to do this anyways, and now they're raising another 300 million to fund their build out, which is the typical form of miner capitulation, right? And it coincides with what we see here in the hash rates, right? machines turned off, the business is no longer profitable. So you need to either invest in new equipment, new machines, and streamlining your operation, or you just turn off your machines to not have any equipment costs, but you still have maintenance costs, cleanings costs, rental costs, if it's a rented property, and baseline operation costs, right? You can't just turn off everything and never use it again. So we see hash rate did bounce back here. Let me actually refresh that if we see anything new on this chart. Yeah, hash rate did bounce back, but comes a little bit down again. So miners are now in distress, and of course there are always miners that will not be able to be profitable at certain levels. That is absolutely normal. We do see it here. This hash rate collapse was the deepest since July. And it's a slightly higher low. This might be the worst collapse that we see this bear market. Maybe we are trending down more until we see a trend reversal here. Once we see a trend reversal, probably the bear market bottom is in, as you do see it. Also, let me see. Yeah, also here, let me pull out this chart a little bit. Here you see also, right, the hash rate reverses roughly a month before the Bitcoin price reverses as well. So we see this here. Unfortunately, I think we can't really zoom in. No, we can't really zoom into this section. But you see basically that the absolute hash rate bottom is here at 87 billion terahash second at 34,000 USDT or USD, and then it comes out and increases, but Bitcoin still goes another way down to 32,000 or something like that in this crash, right? This is where miners got caught off guard, I think. And I think in our crash right now, something similar happened. The miners caught off guard by this sharp decline in Bitcoin here. And now it already bounced back, but Bitcoin will go lower during that time. So everything, we've seen this already, right? Also here, the hash rate trends down from May 22 all the way until here, July 22, and then comes back up, whereas Bitcoin still bottoms out only in December, right? So once we're seeing this hash rate having a trend reversal, we can be for sure that Bitcoin will bottom out then in the next couple of weeks and months. Same here, right? It happened here. The hash rate goes already up, Bitcoin bottoms, right? Everywhere we see the same thing. So we should be able to just look at, right? Even in smaller contexts, it happens. The miners the hash rate goes down. Here, the hash rate already trends up, and only here Bitcoin follows this trend and really follows through with this. And we see it all the time, right? Here, hash rate collapses, Bitcoin has another sideways move, hash rate comes back up, Bitcoin follows only later. So basically, the hash rate would be a front-running indicator what happens with Bitcoin. And as you see here, this hash rate bouncing back sharply, the big question is, will this be the front run to the counter trend rally for Bitcoin that is coming up next, going to 81,000 and beyond for closing our CME gap? Possible, not guaranteed, right? But it's potentially happening, right? Okay, so we covered this. This is also interesting. There is maybe we can listen to this quickly. While this is going on, other companies are building out new business models on Bitcoin. And if this was a bull market, everyone would be like, how bullish is this adoption for Bitcoin? So listen to this. I hope it's a little bit lower, but I think we will manage.
So there's a property.
Yeah.
Physical property.
Multifamily.
Right.
Multifamily. 63 units.
It's a multifamily property. the sponsor, effectively the owner of that property,
Yep,
needs a loan.
that's right.
Okay, they come to you.
That's right.
Okay, you say, we'll provide you the loan in the form of
A loan.
a classic loan.
That's right.
Okay, so you're going to give them cash,
That's right. Term financing.
term financing, and how long's the loan? Just
10 years.
10-year loan. Okay.
That's right.
At above market rate or below, or what's
No,
the
market
just
rate
a
interest rate.
I'm just trying to slow the whole thing. Okay, now let's introduce the Bitcoin piece into it.
That's right.
So no, explain how the Bitcoin piece
And
then
why.
relates. So the loan has been provided.
The use of proceeds is to pay off the existing financing. So
The use of the proceeds
of the loan
of the loan,
is to retire the existing mortgage.
right? So there's an old mortgage.
Gone.
They're going to pay the old mortgage
That's
off.
been paid off.
Okay,
Now they have a little bit extra money to make some improvements in the property.
right. So a little bit extra cash. So the amount of money you've lent pays off the old loan.
That's right.
It's also you have a little bit of extra to fix
Improve
stuff
the
up.
property, fix
Okay.
stuff up.
Yep.
And then with the remainder, which is a little bit
So you
more.
have even a little extra, an
That's
extra
right.
turn.
And that, instead of cash out,
Uh-huh.
it's Bitcoin in. And we use it to purchase some Bitcoin and add it to the collateral package of the loan. So now our loan is supported by both the traditional asset, the 63 unit apartment building,
Right.
and the Bitcoin.
So
Okay.
the loan, it was maybe too
I think so. This is interesting, right? This is not the first time I see this. I mean, this video is older. You see Bitcoin's march to 100,000 and blah blah. It's not that old, right? I mean, we were there a couple of months ago. We have to see that this crash is only 5 months old. 5 months ago. We were at an all-time high of 126,000, right? So, but what happened, and what's still happening is, and I saw this also on Anthony Pompliano channel, that a lot of real estate companies are building out business models where they tie real estate and Bitcoin together for investors to invest in this combination. So Grant Cardone, I think that's the name, right? Grant Cardone was on that channel, and he explained that they're looking at a property, for example, for 250 million, and they buy it as a discount, and then they are, for the investors, they are not only, because he says like the discount is just you have an intended cash to allocate, you get it at a discount, and he fills up this discount money with Bitcoin for the investors, right? And so he buys Bitcoin for that intended amount difference instead of just sitting on more cash, right? And with that, he always puts out a real estate Bitcoin combination. That's how I understood it. And here we have a loan to Bitcoin combination, which is also interesting, right? But in all of these cases, it means that these companies are buying Bitcoin. And of course, right now, these companies are very quiet and they are buying Bitcoin at massively discounted levels, right? And I think it is a mistake to sit here and cry about the Bitcoin price, but not buying, while these real estate giants and banks and ETFs and governments and so on are filling their bags, while retail is basically capitulating to them, right? And with that, I don't mean the whales from 2015 that are taking profits. We see some Satoshi era whales that are also dumping. I mean, that is still fine, right? You see, and maybe they got spooked by the current market development, but it's absolutely fair to see if someone is sitting on hundreds of Bitcoin at 65,000, that's still a massive return, and people want to finance maybe a lifestyle, right? Or moving something off of the risk curve, right? And that is something that I also wanted to quickly discuss here, right? So maybe we can overlay this. So the Dow, right? Let's add the Dow into the new price scale. So the S&P 500 is curving down, right? We've discussed about this. And now let's put Bitcoin also on a new price scale here, okay? And what comes what becomes clear here is maybe we should even do this a little bit differently. We should do it in the DAO, so in the DAO itself, and then we get rid of the DGI and we add the S&P SPX new price scale. Oh shit, and now it's I have to re-add Bitcoin, so it's a different color. Why is it not different color? Can I change the color? So much to learn. I really have to find this out, but let's get rid of both of them quickly, and let's update this. I will in a second I will show you what I really want to achieve here. So we are back to gold apparently, but that is not a problem. We are just going straight to the DGI, to the Dow Jones index. There we go. And now we're trying this again. Let's see if it makes colors. So we're going to do the SPX, and yeah, there we go. So the SPX in the new price scale. But that's CFD, is that the best? Let's see. SPX index. There we go. Yeah. And then we are going to add Bitcoin. And now we should also add an altcoin like Ethereum, right? ETH USD. Okay. And this is now this visualizes perfectly if we align all of these how the money flows in the risk curve, right? So, and there are other things, like if you would put NFTs, they're probably like this, right? But you can see here time-wise they're all aligned, but you see like Ethereum was first, right? So money went from Ethereum to Bitcoin, right? Because the orange line is Bitcoin. So the liquidity was bleeding once this uncertainty increased after 1010. Liquidity was bleeding into Bitcoin, right? So basically that happened here when Bitcoin made another spike. So here you see Ethereum already comes down, right? Let me mark this with a dot, right? So this is the high in Ethereum, from the cycle high in Ethereum. I want to have this red. This is where it turns around. And then where it turns around for Bitcoin is here, right? And this is a weekly chart. So Ethereum puts in a high in August. Bitcoin puts in a high in September. Now, what's interesting is we don't know yet for sure, but it looks like that the S&P 500 put its last high in here in January, and the Dow seems to be, at least for now, maybe it goes higher, right? We don't know yet. Maybe both go higher and then turn around. But the Dow seems to have been putting its last high here in February, so a month later. And then now you could overlay gold also, right? The precious metals now. And gold, if we were to move this up here, gold is still putting in new highs. Gold is at this high point. So we are now going into March, and the risk curve is basically organized from down here: altcoins, Bitcoins, S&P 500, Dow, gold. I don't know if there's anything else than that. Maybe cash, right? Maybe cash, but actually not, right? Cash is somewhere in between, and we see that also with the DXY, for example. If we go into the DXY, dollar currency index, it's down, right? It's also down. It's already in a bear market, right? It's a little bit up here, but it has found its highs already in February, March 2025. So actually, cash was somewhere down in the risk curve. Maybe it's government bonds in the end again, even though that even people don't trust in that. Maybe rotation wise, gold is the last thing to move into. Who knows, right? But it seems that there's a full rotation this time, which didn't happen in the last years, where gold is going higher, and we will see when gold turns around. But everything else already did turn around. But that also means that we should see subsequently the S&P 500 going down, and then the Dow Jones going down, and then maybe gold is rallying throughout that time, right? I think that might be happening. So it's going to be interesting here to see what actually happens. I think for today, that's it, guys. Make sure to smash up the like button. Let's get to 30 likes if possible. I mean, we have 13 people here. So if we could have 30 likes right now, 13 likes right now, on the way to 30 likes later, that would be very, very cool. So thank you very much for paying attention today. We'll be back multiple times this week for Crypto Morning Coffee. And by the way, I completely forgot to say hi to everyone. So Nick Lilipska, what's going on? Good to see you. And also Dr. Knut, GM Boys, as well as Hey Energy and JW. And Mehdi Rizi, also good morning to you. So smash up the like button, everyone. And wherever you are on the world, have yourselves great morning, evening, day, night, or afternoon. And I catch you in the next video or live stream. Have a good one, everyone. And bye-bye.